Good morning. All right, I wanted to come on and make a video on a simple way to trade. This is how I trade every week. I found this to be uh, a profitable way to approach the market and trading in general. And I based this style of trading off the ICT 2022 mentorship, mainly coming off of slide number 3. So it starts with finding a weekly order block. In this case, this example I'm going to use is gold. There's a bullish order block, right? The red candle and the green candle creates the bullish order block. My expectation is for price to sell down into this order block and then buy up at least to the negative 27. Okay, if you go and you watch that ICT 2022 mentorship, and primarily slide number 3, the concept is when the market creates an order block, in this case, it's a bullish order block, you're going to get a displacement going up, right? So this would be the weekly candle. It starts here. It gives you the bottom wick. You get the strong push to the upside, which creates displacement or an imbalance. And then you get the wick to the top side. So the theory behind this trading style is that the next candle that opens up is going to open up. It's going to create a wick. It'll go down into your order block to fill the imbalance. Then it would trade to a new high, which is generally speaking this negative 27. Okay, so all I do is I come to the market, I look for the order block. This week you had a bullish order block on gold, so my expectation was for the market to open up, pull down into that order block. If I fib this green candle, I would mark my golden zone. I will put a ray at my 78 horizontal ray. And if you want to make this a overly simplified version, you can put your long tool. You can enter the trade at the 62. My golden zone starts at the 66 or stops at the 66. So you'll have to adjust yours for the 62. Put your stop loss at the 88. Put your take profit at the negative 27. This trade will give you a 3.39%. And as you can see, price comes down, taps you into the trade. And, we're currently waiting for the price to go up to this negative 27. If I drop down to the 4-hour, we can see inside the order block. We see where price came down, put us into the trade. We see the trade is pushing up. I anticipate the trade pushing up, and you can see this displacement candle coming down. These are the imbalances that need to be filled. So in actuality, the trade will probably at least come to the 23.68 level, but you don't have to be greedy since this is a trade that should fill this imbalance. I would just take it to the negative 27, and this is 23.57. And you can watch to see that this happens by the end of the week or, early next week. And that is it. You don't have to add to it. You don't have to take away from it. You can do this every week. You're going to win many trades. You'll lose some trades, but we all, when we win and we lose, the percentage is probably going to be in the 80 percentile that you win. That is it. That's, you don't have to add to it. You don't have to take away from it. If you do this every week, you're going to find a level of success. And let's go and look at another trade, EURNZD, because there was an order block this week in the trade that I actually took. Let me kill all these drawings for you. I'm going to hit the replay button. Okay, this coming into this week, it was a bearish order block. So again, I'm going to fib the last candle. I'm going to fib the direction that the candle moved. Let me go in here and change my settings back to the old settings. That way, instead of it being at 66, we'll put it back at the 618. That's the standard fib setting, just so you can see how to mark this up. So for me, I bought this trade back up. I bought it from here up to this area because all I need is 100 pips per week. But you could be the person that actually takes a short at the negative 67. I mean the negative 61. Put your stop loss here, and your TP would be at the negative 27. I'm sure there's an imbalance. We'll drop down to the 4-hour to take a look over here. Perfect. You see the imbalance. That's what we're targeting. All right, my trade this week was from this level to this level. And we're going to hit play. As you can see, I got the win. Now, if you would waited right here, this trade you wouldn't catch. I would always go and look for this imbalance to see where it was. And the reason I think that this is not going to go up here, I think it's going to come back and fill this imbalance. So at this point, I could adjust my entry to this level here. And I would just put my stop loss above these highs. We'll leave everything the same way. We'll leave this target. And it'll be interesting to see how this plays out this week. Let me go to the daily so I can see what this is. All right. So this is going to be a 2.77 risk to reward. I guess you could drop this down to give you a 3%. As long as this first order block is covered, that should protect you. So this will give you a 3% risk to reward on this trade, and an easy win of 100 and some pips, I'm sure. This is 228 pips. Yeah. So you could probably get the stop loss down if you know how to drop down into the lower time frames. I'm giving you a very generic version, an easy way to take trades just based off this 4-hour chart, without you having to drop to any lower time frames. You're using the weekly and the 4-hour to select and take, enter every trade. So that's it. Nothing more, nothing less. If you need more info, reach out.